All right, everyone. Welcome to the coaching call here for August. And some of the things I want to go over, and I'm going to do a little screen share here, Mike, so we can see what's going on in the market. And I'm going to start here with 30-year mortgage rates, which thankfully are starting to trend in the right direction. And they just fell to a 3-week low. That 3-week low is still not that great. It's 7.48%, but it beats being 7.8, getting close to 8 like it was just a week or two ago. So trending in the right direction. I was looking at another article that was from late July, and rates were like 6 point in that range just over a month ago, right? So they could come back down there. They definitely could come back down there. And this just talks about, it's just showing the curves here.
Yeah, that's a pretty good chart there. You could easily draw a trend line north, right, or northeast if you're looking at the chart.
Yeah,
it's weekly. Okay, and then the quick drop down, which helps out a lot. The question is, does it pop back up and continue that northeasterly trend up, or does it enter like a new regime?
Yes, and that is the question. We'll get into that here in a little bit here in another article I have coming up. But this is a good one from Redfin. Real estate investors are pulling back, buying 45% fewer homes than a year ago, which is a massive drop. And I don't think I've seen a drop this big, Mike, since COVID or the shock when the rates hit last year around June, July, they started dropping. Remember when the rates really crept back up, really shot up last year?
Yeah.
They started pulling back a little bit then too. And it's typical. This is seasonal, right? We're here in late August. This is the time where
vacation season, getting ready back to school season, right? Yeah. Like the families will get back on their normal routine, depending on where at a country, like in the Northeast, like for us, it's after Labor Day. Parts down south, like you're already back into that routine.
Yeah. That's why typically August is the slowdown time, because you don't get things under contract. You think about most of the country, I believe, still starts school after Labor Day. And with that, people, if they're getting under contract here in August, they're not going to close in time to be able to start for their kids, everybody starting school. That, is one of the reasons it slows. Vacations is a big one, like you said, Mike, and also taking kids to college, all these different factors that come in. And then we get into the school season, which then goes into some holidays. You got Halloween time, then you get Thanksgiving where things really slow down, Thanksgiving through Christmas. And then right after the new year, they start to slowly creep up again, more in the South, down where I am here in the Sun Belt and through Arizona. And then later on in March, up in the Northeast, in the Midwest, and in the northern parts where, winter starts to pull back and we go towards spring and all those things. But what this article had here, and this was pretty important. So investors pull back 45%. Overall home sales are only down 31%, which means there's a void for us, which is huge opportunity for investors. So we're seeing this, Mike and Jake, right? And that we're getting more deals accepted right now over the past month than we had in the previous 2 or 3 months. Yeah. And that's because a lot of the investor activity is pulling off, which means we're getting better deals because they're getting less bids on these properties. And we're also going into the best time of year to buy auction properties coming to the end of the year. Mike and I preach this every single year in our coaching calls. We start now. We're heading into September tomorrow. September, October, November, December, January, and even into February is peak time. And I think this year we might even go into March where we're still getting deals, if I recall.
Yeah.
So, and then it slows down, April, May, June, July, and really most of the time in August too. So your peak buying season is coming up because the banks want to get as much debt as they can off the books and take as many losses as they can and get as much of a cash infusion as they can before the new year here. So, but that 14% opportunity between 45% fewer homes being purchased by investors and 31% by homeowners, that means there's going to be more opportunity for us to sell to homeowners, the investors that are still there, and potentially for larger margins, right? Because now we're buying them at cheaper prices and hopefully selling them still at what the market is right now. So we got some opportunity, and I think we've got a few of them right now that we're selling. If you remember that, right, Jake? We got Lake Charles, we got one in Victoria, we've got another one coming up. I can't remember where it is. Actually, a few more coming up in Pensacola, right? And then another one in Hollidaysburg. So we got some good potential margin deals that we're seeing, and we're shifting away from the fix and flip and even away from the wholesale as much as possible and just try to list and resell. So one, it cuts your holding costs because you're getting rid of it quicker. Two, you don't have to deal with all the headaches that Jake has to deal with turning all the utilities on, getting all that stuff squared away, dealing with moron contractors. Like, we're going to get into Cuero, Texas in a little while here, Jake. So we'll talk about some of the reasons that Cuero is probably some of the reasons we're looking to go more wholesale. But also, I was just on one of the mastermind, I guess, virtual meeting last week, and Lee Carney, who's one of the guys I really like and trust, I've known for a very long time, and who does the same thing we do. He just now does it only in Florida. He's going to complete wholesale. He doesn't want to rehab anything anymore. He's sick of the holding time, because he was losing money on deals too, just like we have ended up losing money on some of these deals where we're holding them too long. So we're just shifting the model and just shift the model as it goes here. Next article, this is actually a good one. This is Goldman Sachs predicting slow growth for home price increases through the future. And it makes a ton of sense when you get into it with their numbers. Yeah. So if you get into 2023, they think it's going to be a 1.3% increase, 2024, 1.7. When you consider a lot of people are calling 2023 to be negative, right? They thought the values were going to fall anywhere between 3 and 8%. To have 1.3% growth is pretty good. But that's because we're so inventory restricted that we still have highest and best offers coming in, bidding wars and all those things. But 2025, 2026, they see prices increasing a little bit quicker, but it's not the norm. Our normal average is 4.5%. I think that goes back to 1972, if I remember right, where this number comes from 1972 to currently. 4.5% is your average annual increase in home values. And we've had some crazy years since COVID, right, where it's been way higher.
Well, it's starting to mean revert, right? You overshot it for a few years. Now you're going to undershoot it, but you're going to ultimately hit that long-term trend.
Totally. And they're hoping and thinking it's going to be a soft landing. As investors were always worried, like that financial crisis, 2008, that was not a soft landing. That was a complete catastrophe that really inverted prices, about 20% and 30% in certain markets throughout the country. And then it slowly recovered. Well, now the way the government intervenes, the way the Fed intervenes, I think it's harder for prices like that to go down unless there's catastrophic unemployment. Right? If we run into that, we could talk about that. Big unemployment could definitely push things down. What are you guys' thoughts on this with the home group? Do you guys agree with Goldman Sachs on this?
I mean, we're saying, I'm kind of in their camp a little bit there. It goes down to what we've been saying for the last year now, right? The supply is so low. This is not a 08 problem where it was just bad lending. It's pure econ 101, essentially supply versus demand. And, when you have supply that short, whether it's people don't want to sell their house because they have a 2-3% mortgage and it's sticker shock, because most people buy on 30-year monthly payments and not the actual home value.
Yep.
A group of people just never gonna or delay that sale for a long time, right? Because they got a sweetheart deal, let's just say, or deal of a lifetime, essentially, when they bought at those low rates.
Yep. And low rates is part of it. So one other part in this article, I think it might be down a little bit further, where they're talking about interest rates. Some analysts are predicting that interest rates will fall below 6% again in 2024, which would be great, right? If you do that, then the prices increase a little bit more for two reasons. I'll get into that in a second. But Goldman Sachs figures we're going to be in a 6% range for the next few years. They're seeing for at least the next 2 to 3 years. They figure right around 6%. Here it is.
I mean, if you think about it too, we had a chart like this 2 years ago, probably, where every 100 basis points of interest rate, X million more people could afford a house, type of thing, right? So you go from 7 to 6. Does that open the door to 10 million potential buyers? Or I don't know the exact numbers here, but I remember seeing we showed a chart like that a while ago with like 100 basis points. How many more people could afford a property at that level?
And it was many millions, Mike. That was a big number when that interest rate dropped below that. How many more first-time home buyers were able to enter the market again, which now are being kicked out, which is going to push them in a rental market. I'm going to get into the rental market a little bit here too, on how one affects the other, right? Home, I think mortgage rates being high and it being expensive to get into homes helps the rental market, right? And if rates shot down and more people can buy, opposite, right? So
rates dropped down yesterday, actually.
Yeah,
we showed that earlier, Jake, before you joined the call. Actually, the 30-year chart
right here. Yeah. See how it dropped? It dropped to lowest point in the last 3 weeks, which is pretty solid, pretty good here. So yeah, we're definitely happy about that. That's definitely helping. There was a couple other things, and I think that's it. That's it on that article. Now we're going to go into the apartment growth. So apartment rent growth projections for the next 5 years. It's been down 0.6% this year, which basically means it's just flat as far as rental values. This is multifamily, okay, not single family housing. Single family housing, there's another article that I couldn't find that showed it's still increasing, right? Because people would rather live in a house than in an apartment. But what they're predicting is a 3.9% increase in 2024 for rents, and a 5% the year after, followed by the more normal 1.5% to 3% in years 3 to 5, which, seems that makes a lot of sense. But this also makes a lot of sense with fairly stable mortgage rates or higher mortgage rates. If the mortgage rates were to spike back down to like the 5%, 4%, these numbers would definitely decrease. And then inventory again would drop because it would enter, a lot more people that could buy the house would buy a house and would enter the market. So we'll see what goes there. But I tend to think it's going to be relatively flat. And I would love to see 6% mortgages. I mean, that would be tremendous. That'd be really good right now. It's hard to believe, a year and a half after we had 2.75% mortgages, I'm hoping to see 6% again.
I'd love for it to go in the 5s, then I'll refinance.
Jake's just got one under contract, a property that he's going to be moving to. And is it Downingtown area? Right?
Downingtown, yeah.
And it's a pretty good deal he got on that one, I think.
Oh, yeah. I mean, I held to my number, like you said, so.
Yeah, this was key. What Jake was talking about. What were they asking? 775 or 750?
795.
790. He made an offer, went in lower. And a property sat on the market for a little bit, right? Not too long, but enough.
35 days, yeah.
Yeah, and you got under contract for what's the price?
725.
725. That's a pretty big discount right now in this market with constricted inventory where you are. So that's really, really good. Yeah, that's gonna be a nice.
Appreciate that.
Nice little deal. And your rate, Mark Oscar's taking care of you, is like 6.65%. You bought it down a little bit, right? The rate.
We actually. I actually went with the other guy because he came back in actually a lot lower.
Oh, did he? Good.
I was out of pocket I was out of pocket like about $8,000 to $10,000 less, and I didn't have to buy it down as much, and the rate was 6.624.
You can't beat that. That's a great rate.
Yeah, Mark was trying to get me to take the agent commissions to buy it back down a little bit. It's like, Mark, I can't do that. Man.
That's funny. He's good though. Mark is.
Yeah, I like him. Yeah,
go for the best deal, man. With rates, especially you don't know how long you're living there, 2, 3, 4, 5 years. But if rates do drop into the 5s, then you just refi it.
Yeah. Plus, we already have 2 other properties with these people, so made sense.
It did make sense, for sure.
Yeah, that's why they gave us the best deal, probably. Take care of their customers.
For sure. Yep. All right, Bigger Pockets article. And it just talks about the housing market this year, that it outperformed expectations because we had low inventory, right? Pretty simple. It's all basic. This is, the real estate market is nothing more than basic macroeconomics, right? It's supply and demand. We have low supply. We still have higher demand than supply. And if rates stay reasonable, it's going to continue. The prices will be flat to maybe increase a little bit.
Yeah.
And he thought it was going to go down, a bit this year, but obviously it hasn't. And you look at pricing and everything, how the median housing price, it dropped a lot late last year after the rate shot up. And now look how it's come back up. I don't think it's going to quite make it up to where it was before, but still pretty impressive with how that's rebounded. Curious to see if rates go. Think about this for a second. We got to go the psychology of humans, right? Psychology of people. It took a little while last year for us to go from 2.75% interest rate to 7.2% interest rate psychologically. And people stopped buying at the end of last year, this time in 2022 because of that. And then in 2023, they were actively buying again. They got used to those rates, figured, okay, the rates are going to be higher now. Let's just deal with it and do it. And then the rates went down a little bit and the housing market was pretty good. Now rates shot back up and now they're dropping back down again. I think if they drop back down to that 6 or sub 6 again, you're going to see a lot more people potentially enter because they're going to say, all right, this is an opportunity. People are looking for opportunities now when the rate drops. So if that rate drops, and the timing happens to be right when we are putting our properties on the market to sell, we might get a nice little benefit in that and a bidding war in some of these properties, which would be great. All right, that's that. Now let's go into foreclosure activity because this is key to us and what we're looking for. Another Bigger Pockets article from July. But the numbers keep going up, as far as foreclosures. and it's good for us. We want slow and steady foreclosure growth, right? We don't want catastrophic, like huge increase in foreclosure. I mean, we can pick up things cheaper. Problem is that's going to throw more inventory into the market and reduce pricing a little bit. So this slow and steady increase, and we're seeing more and more inventory, which is good. So that should continue. But you're seeing some of the areas, and this is where we got to look at for the future. What areas are getting hit the hardest? Oregon, Alaska, West Virginia, and Arkansas. 72, 83%, 95, and 99% increase. Those are pretty big increases. And some of them where it's been below are these markets, Albany. It's a expensive area in New York, right? Virginia Beach, another one too. Baltimore's affordable. Richmond's still somewhat affordable, I guess. Montgomery, Alabama is pretty affordable.
I've seen a couple each week from one of those areas. I mean, there's been a few from Baltimore, and there was one last week in like the Virginia Beach area.
And that's good
Alabama.
Area. If you see that Virginia Beach, by the way, or Baltimore, track it, look at where it's going, see if it's meeting reserve or going over, because that's like, it's a pretty hot market, which it is. But yeah, Alabama's been hot. It's been hot for years now. Yeah. And continues to grow. Top 10 states with the highest foreclosure filings: Illinois, New Jersey, Maryland, Delaware, Ohio, Carolinas, South Carolina, Florida, Nevada, Indiana, and Connecticut. So nothing huge, but biggest amounts: Illinois, Florida, and Ohio. Kind of surprised Ohio's had so many foreclosure filings. It's not a huge state, but where Florida is a big state with a huge population, so you do expect a lot more. Moving forward, the foreclosures we should look for, and some of them are going to happen, are from when these rates shot up. These are the people that are going to walk away from their properties quicker, right? Because they can't afford it because the prices were higher. So foreclosures, we have a chance to pick up some things over the next couple of years because the rates had shot up more so than if the rates were still really, really low. All right, Mike, I think I'm going to kick this. Well, do you want me to kick this over to you? Or you just want to? We'll just run through this together.
Yeah, we'll run through it together. You want to keep it up since you have it open, or?
Do it. Yep. So here we go.
And we kind of talked about this already, right?
Yep. Preparing for the busy season.
We just talked about, we talked about some market, but like current strategy, we kind of alluded to in our theme where we're shifting less and less full renovations, partial renovations, wholesale, whatever you want to call it, more and more just pure buy and relist on the MLS with maybe a clean out type of thing. So
as is, yeah.
We and some of our other peers that do this around the country have kind of shifted to that strategy in this current market the last several months now.
Yeah, which I think is a smart play, especially this time of year, one, and two, just because of the holding costs and everything. What's crazy? What has gone up so much more, and I mean drastically, and I mean all over the country, not just in Florida because of hurricanes. Property insurance is through the roof. It is so much more for me in these properties than it was a year ago. I mean, it is double, triple, quadruple, 5 to 10 times in some of these markets, the price it used to be. I used to be able to pick up a property, 3-bedroom, 1-bath, we're picking up for 80 grand, and the insurance would be $400 to $600, maybe $700 a year. Now the cheapest policies I'm finding are $1,400, $1,500, $1,600. One's in Florida, 10 grand, 5 grand, 3. The price of the homeowner's insurance is through the roof. And the biggest thing to top it off is for areas like Florida and South Carolina, Texas, where it can get hit by hurricanes, they don't cover for named storms, which makes no sense for me. How can you not cover for named storms? What is the point of homeowners insurance if you're not going to cover for that? Now, Corey's going to help us out. Corey did find a place where we can get named storm insurance. So that definitely, depending on what areas we're buying in, we're going to have to look at doing that, like especially in Florida and then anywhere near Houston, Texas, anywhere in Texas that can get hit, Alabama, Louisiana, Mississippi, in those areas. Even Tennessee gets hit by hurricanes too, as well, especially like Memphis, Tennessee, in that area. But we'll have to keep looking at that there. All right, now we're going to do a deal review. This is, you want to go over this one real quick, Mike?
So again, a Pittsburgh property. So we'll paint the story before we get into some of the brass tacks numbers here. So this is an auction property, normal due diligence, review it, has potential, reach out to a local agent, and then from there, make an offer. This one has a twist to the story though, Paul, because we found out, it had some structural issues, and I believe you're able to lower the original purchase price. And it was one of those things, I think you sent in earnest money deposit earlier. We sent it in earlier in the year, but we had a back and forth with the auction company on getting it renegotiate a little bit our purchase price, but ultimately it happened. And then I think we officially closed on this one at like end of June. We listed on the MLS and had a buyer right away and closed on it like basically 30 days later, 34 days later, I think it was. So it was a quick, cash buyer is a quick bread and butter wholesale with a 1 month or 34-day hold period. The way we funded this property was just through one of our private lenders. So an individual, not an institution. And then the agent is great. I'm actually working with her right now on finding more property deals in the Pittsburgh area. So we kind of, meet and go through properties and, make offers, finding a new rock star agent in the Pittsburgh area.
Yeah, whenever you find these good ones, you just kind of latch on them and hopefully they bring you other deals and off-market deals and other kinds of things. But in this one, we had gotten under contract for $49,500, and it's a HUD CWCOT, and those drive us all crazy because they try to never let you in. But I got a way for the agent to get in, and the door was left unopened, luckily. So she was able to get in there, take pictures, saw there's a dehumidifier in there and moisture on the walls. The garage wall was leaning a bit, so we got price quotes on repairing doing both those renovations. And I initially went crazy high and asked them for like 20, knowing they would not give it. I knew they would not give that, but I asked for 25, knowing that I needed to get 10, and I wanted 10 on that. We went back and forth, and we finally settled at 10. So we were 39.5. We listed for 79.5, if I remember right, and sold it for 75.
Correct. Yeah. I mean, the actual numbers are on the next page if you want to kind of go through the actual numbers there, Paul.
We'll do that. And to draw back to Pittsburgh, you'll see in the numbers 5% transfer tax. And when you're talking about a HUD CWCOT, you're paying all 5%. Purchase, and then plus you're paying title insurance, all these things. And then when you resell it, another 2.5%. So you're paying 7.5% in transfer tax. So
that's a good point. Knowing your state transfer taxes is key. Pennsylvania, most counties are 2%. There's 2 counties that are 4 and 1 that's 5. We happen to be in Allegheny County, which is a 5%er, which is basically a county in the heart of Pittsburgh where this property was. So that's why you see closing costs so high here on the snippet of the spreadsheet here, that these are actual numbers from the deal.
Yeah.
Not bad for do nothing. Well, I wouldn't say nothing. You had to negotiate, right? And that's a good negotiation tactic, Paul. I want to point out that you did, right? You wanted a 10 number, right? But you didn't say 10.
Right.
You threw the ball all the way downfield to 25. And then, bank's like, no way, I'm going to do that. And they thinking they're winning, giving you 10. By the end of the day, you got your answer.
Totally. I got where I wanted to be. They were going back and forth trying to offer 5, then 7,500. I said it's a no-go. Like the least I could do is 16.5, and boom, they went to 10. I'm like, all right, we'll do it if we can close quick.
Yeah.
So we did that knowing that we were going to have a buyer in that $70,000 to $80,000 range, and 19.5 is pretty good profit on that property. So it ended up being pretty good one there, and that's the ones we want to keep doing where we do nothing to them.
Yeah, I mean, if you look at ROI in 1 month time period there, what it was like north of 20%, and you analyze that, it's an even bigger percentage now.
It's a great return. That's a hugely great return. You just can't beat that.
Can I ask you, what does that conversation look like when you're getting for the agent to bring you deals? Because I mention things to them and I'll talk to them, so they'll put me on like a search to where it's just a regenerating email where I'm just, again, searching for a needle in a haystack.
Yeah, but you want them to do.
So that's one way to do it, right? I have a few of them set up, Jake, where I give them the specific criteria I look at. Some MLSs, you can actually do keyword searches like TLC, fixer upper, REO, estate sale, right? Every MLS is different from sophisticated. But this agent is, I'm looking at auction sites I usually want to look at in Pittsburgh now, and just because I have a local person to run out, and then she'll find us some other pocket listing type of things as well. So I don't have an actual MLS feed out there.
So it's just pocket listings. She's like, hey, I saw this one coming up. Take a look if you want.
Yeah, or I know of this one coming up type of thing. Yeah.
That's what you want. You want them doing the work for you. You don't want them sending you, killing your in bin.
Exactly, because that's not work to me. That's them just like throwing you spaghetti at the wall. Like I'm just someone to filter, knowing what I want, and I don't want to look at 30 things. I want to look at 2 things.
Yep.
So that's the problem I'm getting.
They're just putting you on autopilot.
I don't want autopilot anymore because it's mostly shit. Yeah.
Yeah, totally. Yeah, don't do that. You reach back out to them, say, hey, the only way this is going to work is if you do the due diligence there and say, like, this is a deal. Look, you're going to get the acquisition, you're going to get the commission on that, and then when we resell, you're going to get the commission again on that. So they got to look at it both ways.
And then, I mean, I've been on a few wholesaler lists in Pittsburgh for years. I kind of just been deleting them like the last year because they weren't deals. But now I might actually pause, spend 15 minutes a week quickly looking at a few, and if anything catches my eye, now I got boots on the ground to take a look at it for me. And in those models, me and Paul will probably, get it cheap from the wholesaler or just try to relist it as is on the MLS or do some kind of just a minor enhancement type of thing.
As much as we can. When we have target markets where we have the right, we have to have the right agents.
I mean, that's the problem with the wholesalers assigning contracts. Like they got to sell it real cheap because they can't take it down and put it on the MLS to the retail population, and because they don't have the capability of closing on it, right? So that's where we come in to solve that problem, where they make a few bucks and we could actually hold it, purchase it, and list it to a retail buyer, not an investor.
Yeah.
So that's another model we've utilized as well in the past.
Yeah, which is always
not
a good
so much
one.
in the recent time period, just because of like most
inventory
wholesaler stuff. Yeah, exactly. And most wholesaler stuff, they're getting it under contract from a retail perspective, and not necessarily like an investor perspective.
Yeah, they send Mike and I deals that they think are deals, and we're like, nope, this is like an MLS listing.
Yeah,
it's really not.
It needs $10K repair, but the house is falling over.
Yeah, right. It's insanity, some of the stuff you get from some of these guys. But with that investor activity,
there's a few names that you recognize out there. Like, okay, this guy or gal has a clue, right? I could actually look at this one.
Yeah, there's a few good ones out there, and the cream will rise to the top. And as the market continues to shift and more investors get out of the business that were especially just kind of nibbling in there, not really super active, then we'll hopefully get better deals and better opportunities for it here. All right, now we got the one in Lake Charles, and this one I think we got under contract for right around 59.5 or so, Jake, if I recall right.
It was less than that. I think it was 55.
Yeah, I mean, the numbers might be on the next page on like what we thought initially. Yeah. I mean, again,
here we go. Yeah,
this is what it is potentially, right? It hasn't closed yet, this deal. From our initial analysis, Jake found a great agent. We talked to the agent. We did our own Zillow analysis, and then we thought this would sell for as is for 95. I guess that's a weird number, so that must be the actual number that we're picking it up for, the 56. And
I think it is. And there's going to be, probably more closing costs than 500.
I just put 500 there.
Yeah,
the holding cost will be less. I put 4 months.
Should be less.
Yeah, and because we already know that, because it's already under contract with the buyer from the agent, it's off market. Obviously, they had a connection, and they'll close in September. The only issue is, no biggie. We got probably $5K less than we maybe thought initially we could.
Right.
With less holding costs, some of those things will be offset, but still you're making, again, 20 profit on a $50-some thousand deal. I'm not too good at math, but that's a big return on less than a month hold.
Yeah, that's great.
Oh, we sold it within a couple of days, and it's closes next week. Cash buyer.
Yeah. Yep. They moved it up. I think we're going to close either.
They moved it up. Okay, I had the 14th in my notes. Yeah. Okay.
They moved it up, which is good for us.
Did you get the paperwork she sent last night?
Did she send some last night? Oh yeah, she did. She sent a DocuSign, if I recall right. And I did sign that and took care of that. That was just an extension or whatever, so we can close this week or whatever that paperwork was. It was
supposed to actually be, I think, Friday the closing.
Yeah.
But she said one of the people there, I guess in the township, screwed it up with the title search and all this. She's like, they just did that. We don't need to do all this. So she rectified it. Now it's going to be Monday or Tuesday or something like that.
Basically what we had to do was we had to connect. Jake and I connected them with Alamo Title, our title company that we use on the purchase side. They got everything squared away. They saw everything was good, and now we can go to closing. So it's nice.
I just want to highlight an example of why we shifted to the wholesale model again. This is the second deal, just two of random ones that we've recently done, and look at the ROI dollar amount and basically hold period, all like a month holds, right? Mm-hmm. High ROIs. Nice returns on actual dollars too. I mean, this is why we pivot to the wholesale model. A lot less stress as well in management time.
Yes, big time. Big time better. And I think that's the end of that there. So I'm going to stop the share there. But I want to go over the one in Cuero, Texas, which is a reason we're shifting. And then Jake can get into a lot of this because it was really very aggravating for Jake to have to deal with this contractor, the agent, all the different things going on there. And he and I went back and forth on a daily basis about a lot of the stuff going on. And we still only netted around 29 and change, which should have been a 50K wholesale or 50K, close to 50K, right? I think it was to be 46 at one point. And then we end up having to put like 11,850 additional renovation for the FHA. And this is one of the things I really want to get into.
I want to pause right there, though, Paul, before we dive into that.
Go ahead.
You quoted the Cuero number. You thought you're going to make 50, ended up being 29, right?
Yep.
I just showed two properties where you don't get gray hair in the 20s.
Yes.
Again, I just want to reemphasize the shift, why we're shifting, right? So
that's so important.
Reasons why we're shifting. It's your time, energy, money. You got to factor in all these things in life. It's just not looking at the dollars. It's looking at through your lens through a lot of other things as well. Like, what do you want to get out of life in investing?
And totally. And Jake's got 2 young kids and a wife, and he doesn't feel like being on the phone with the contractor, chasing down, email and texting, doing all that, and going through all the aggravation that we went through with there. And he had to do it all the time. These contractors are slow to react in different markets, and Cuero is not great. And the shame of it is, and I tried to find somebody to do some vinyl siding work down there, but neither Jake and I could find anybody to do that, because this whole renovation could have been done for about $2,500 to $3,500, literally just putting vinyl siding on top of this wood. Instead, they're replacing the old wood, scraping it, replacing rotted wood, because it's FHA, no chipping paint allowed. So with that, you cover it up with vinyl siding and vinyl softening, and you have no issues. But unfortunately, there's nobody out there that did any of that kind of work that we could find, where they're all too busy. The agent sucked, and he didn't have anybody other than this clown that we dealt with. And the guy did okay work.
I found that guy too.
You found him. So the agent didn't even find him. Yeah, the agent was not, an all-star agent, but sometimes you just take what you can get there, because it's tough in those small markets to find anybody. And at least he had a good value, like an idea of the values of the homes there. So he had some positive attributes, but probably not somebody we want to deal with.
I made the mistake of giving him the listing for Victoria, because things were going well at Cuero at the time. I was just like, hey man, you're a nice guy. He knows the value pretty good. So he went and visited a home for us, did some legwork, says, okay, we'll give you the listing. And now we can't find anyone there to just fix the damn pipes, which are super minimal. I could go there with a wrench and do it. And I've been trying to deal with that and the fixtures for 2 weeks to find somebody to get in there.
Right. Because that's a nice property, and that'll sell and do well. It's just, we're talking about doing some really minor stuff to this one, just so we could sell it to a mortgage buyer and make it easier. And this one will give us a big difference when we go to a mortgage buyer compared to just selling it to another investor to fix it and flip it. And it's not a super big town, right, Victoria, if I remember right, but it's a nice home. It's a really nice house. So this one should do pretty well. That's another one we should do pretty well with. The Bacola, Oklahoma is another one, Jake, I think that we got. And the Hollidaysburg, these would be ones we probably talk about next coaching call as things move forward with them. Hollidaysburg, PA, which we're picking up for around 113 or so, 111, somewhere in that range. I think it'll be like 115 with closing costs and everything. But Jeff Walker, the agent who I have known as an REO agent, I've known him since like 2004, guys. That's how long I've been working with Jeff, a long time in PA, because he covers so much of the Pennsylvania market in the middle of the state there.
Yeah.
And I always know the Hollidaysburg, because there used to be deals on HUD on Hollidaysburg way back in the day, and they would go pretty good values, right? It was hard for me to find anything there from an investment standpoint. And we got lucky on this one and confirmed once you got that high bid notification there, and I confirmed with Jeff the value. I'm like, can we list this at 159.9 and sell it quick? And if he says, yeah, it's going to happen. He's like, yeah, this will move quick. You got it at a great number. We're in good shape. So I know we'll be in good shape. Even if we don't get 159 and we only get 145, we got a nice spread there between 113, 115, and 145. We still got a 30K spread minus other fees and stuff. So I still think worst case scenario, we net 20K on this one, which is great.
Yeah.
Especially on a quick one, right? On a quick one. But I anticipate we'll get a little bit more on that.
Yeah.
I'm anticipating 30 on this one.
Yeah. You get more confidence when you're dealing with a veteran like that.
Yep. Yeah, it's good to get this good
veteran
REO.
agent. When I say veteran, someone with experience, right? And they know the REO market.
I think, Mike, we talked about this years and years ago when you first started working with me. And there was agents I dealt with in like Canton, Ohio, and the price point we were picking it up was like 17,000. Yeah. And she's like, "You'll sell for like somewhere between 17 and 19,000." Sure enough, boom. With the numbers, they're so tight and they're so good with the numbers. They know exactly what they are in certain markets. The good experienced ones, right? Newer ones don't, but some of them are really, really good. There's a lot of wallflowers out there who aren't that great, but you got to work your way through them. That's why it's important, like contact multiple of them. Try to get the best one's going to hustle the most and hopefully has the most knowledge of the market. So anything you guys want to add to that?
Trust but verify, right? It's just because an agent sends you a comp or a CMN, you just, and they verbally say something, like you got to ask, like, well, how did you get to that number, right? Because, sometimes they'll just randomly send a report with properties that aren't comps. It's just this whole zip code or square footage all over the place, right? And I got to go through this and try to decipher, like, well, what's the comp now, right? So,
or a different town.
Yeah, a different town. So you got to, I see newer people through the program ask me questions like, oh, the agent said this number. Well, how did they get there? I don't know. That's what they told me on the phone. Like, that's not the right answer. So you got to trust but verify and, look at the data they provide or even have the agent say, a good agent is going to tell you this. I think after repair value is 300 based on comps A, B, and C, right? Like that's someone you want to work with, not just someone verbally guessing a number and not providing data to back that number.
And it's trust but verify. All it is 15 minutes for you to go on Zillow, look at those comps, compare those properties, and make sure, if it's a 3-bedroom, 1-bathroom, 1,200 square foot ranch, that you're comparing it to other 3-bedroom, 1-bathroom, or 1.5 bedroom, 1,000 to 1,500 square foot ranches or similar style houses in similar conditions. Because you come down here to Florida and they're sending comps on a property that you have that's built in 2017, but they're sending you comps that were built in 1967. That's not a comp, right? In Florida, everything changed from 2006 forward in hurricane standards, the way the builds go. So those have more value, those houses do, than ones built older, vice versa. So you got to be really careful. If you got an older one and they're sending you new home comps, that's not a comp. I think
that's a great point, especially in expanding areas where, your house is nice. It was built in 2002, but right next door is a bunch of 2022, 23 new construction homes. You can't really use them either. You got to filter them out and look for the stuff from the early part of the century here.
Yep. And then looking at HOA communities and stuff, you want to try to stay right within that community, because if where I am here, my community, which doesn't have golf, the values are far lower than I could literally reach out and I could throw a baseball or football and hit the other house on the other side in the other community. And their values are double to triple of the values of mine.
Because of the amenities they have, right?
Amenities they have, golf that comes with it, the size of the homes, all those things.
That's a great point, especially even that works in that example of HOAs, or even like townhouse neighborhoods, right? They might not be part of an association, but you got like a bunch of townhouses, one style in that one area, and then you got totally different townhouses like a few blocks away. And they might not be in like HOAs or anything like that, but it's day and night. You can't really use that other development probably to comp those townhome area, even if it doesn't in an HOA or anything like that.
Totally. And now I'm going to go to Jake. I want to use your house as an example here, because the house you're going to sell now is in an HOA. When I was pulling comps for you and everything, and I like to pull comps in multiple times and multiple time frames when I'm looking at the 180-day one, then I'll go the 90-day one, and then go 60 and a 30. And when I looked at, there's 2 that just sold in your community, Jake, 116 Cricket, and then there's another one that's really close to you too. And both are end units, but they sold for $573 and $560. So those 2 are the most recent ones. Ones before that, you have a little bit lower valuations, but still good. The key is there's nothing for sale in your complex right now. So you're going to be a market maker in that complex. And when we price that low, you're going to get, I think we get a good bidding war, and I think we're going to be in a 545 to 565 range for your property.
Awesome.
That's where I feel like it's going to be. Just looking at it, gauging the market, seeing what things are, and your lack of inventory up there. And you have the huge Indian population that wants to buy in your community in there. And I'm already texting with the one guy. So he's looking forward to when it goes on here. I think
things.
Back with bidder.
Yeah.
Yeah, for sure.
Yeah, let's do that 2-day open house.
Yes. Yep. And I'll try to find somebody in that office. If not, I'll even check with my old office and see if anybody wants to go out there and do it.
The agent that sold us our house said she would do it.
Beautiful. So that's another option.
I was like, I don't want Paul to have to pay you because that's not right.
They don't get paid.
I'll pay you out of my pocket. She goes,
no. They sit them
no.
for free, though, Jake. They sit them for free because they're trying to find buyers.
That's what she told me. She's like, I can find a client there. I'll go. I said, okay, well, that's what you want to do.
Perfect. You might want to use her just for that. I'll still check my office, but you might want to use her. Just give her another opportunity to find, to get some more buyers for her. I'd be all happy for that. But yeah, no, I think you're going to get good value on that. And that's just because there's no supply. So just getting into other people looking to buy at other parts of the country and stuff. If you've got no supply like that and you got something to sell, you're going to sell it at a premium. I just sold one a land sale like that sold for a premium, sold for $30,000 over ask because of that. So this is just going on everywhere where there's constricted inventory. And then there's places where there's lots of inventory and you're not going to, you'll get a good deal to buy, but you're not going to be able to sell it as easily. Yeah. So
for sure,
different markets there. But our properties that we're buying, Jake, here in these rural markets, they're still moving pretty quick, right? I mean, they're still moving.
Yeah, the ones we picked up recently, we're going to do well on those. Even the one in North Carolina, if we can get that smell out of there, we're going to sell that for a big time premium, I think.
That's going to be a big, he's talking $200K where he wants to list that thing. And we're 112 purchase or somewhere right in around there with closing costs, I remember. Yeah, so we're pretty good. We're going to close on that early next week. The insurance company, because of the storm going through, put a freeze. We couldn't get insurance on it. So I told auction house that we can't close on it because of that either. Plus, we don't want to buy something before the storm goes through. It could flood it and damage it, and let the bank deal with it. Maybe we can get it cheaper, but I think it's fine. I don't think you're having any issues with it.
Yeah, so. I got to reach back out to the AC guy because I never heard back from him, so I'll give him a call after this.
Yep, and that's simply like the AC was working. It probably just needs a Freon charge. This thing, there could be a leak in the line, which means they might just need to replace the line. Not that bad though. Then they get the AC in there, clean, get rid of that smell. It's a cat odor, dog odor smell, right? It's an animal odor smell. So there's multiple ways. Let's talk about how you can get rid of that smell. He's going to use a cleaning lady. It's going to spray a solution. If it's cat piss, it won't.
If there's carpet, get rid of it immediately. And
there's no carpet. That's number one right there. And the padding, you get rid of all that stuff, and the tack strips because they will smell horrible too. But I've used oil-based kills. It's a little trade secret. It's super cheap, and it goes on concrete. It goes on anything you put on the walls, wherever, especially cat pee. It has a really bad smell to it. Completely encapsulates the smell and gets rid of it, and then you're good to go with.
And it works on cigarette smokers too. You get less of those people. But like, I remember my first rental, like the one tenant smoked, layered it, I painted white kills, and then put something else on, and the stench of the cigarette smoke went away.
It's gone immediately, and it gets rid of the yellow color on the walls too from the cigarette smoke. And the oil-based kills is the best. It sucks to work with it, don't get me wrong, because it's oil-based, but there's nothing more effective and cheap to get rid of stuff. Also, you can use
gloves putting it on too.
What's that?
Wear gloves when you're painting.
Oh yes, gloves and everything. By the way, if you got mold, you can actually use oil-based kills on top of the mold. It encapsulates it and it stops it from being able to continue to do stuff. It's a remediation method I learned when I had to take that mold remediation course. So you can actually use it for that as well, instead of paying some of these companies an outrageous money to get rid of it. Now, sometimes you have to, it's behind the walls, and then they get that ozone machine in, the ozone machine kills it. But if you see it and it's there, boom, you can take care of it with that too.
Yeah, there's that type of paint too, right? That can kill the mold, right?
Yes, there is. Yep.
We had to use that in Hubbard.
Yep, we did. Yeah. Sherwin-Williams makes that's one of their specialties now, and that's they got some really good mold resistant paint and stuff that just doesn't allow it to grow. It's neat what they're doing now with some of these chemicals and stuff. So, be interesting to see what they have going forward. But getting back to our whole purpose in the beginning of this is try to get away from everybody out there. Try to just wholesale as much as you can. And wholesale as need. Like if there's great opportunity for you to just do some minor things to resell it quickly, that's good too.
Yeah, if you're going to put $5K for whatever thing that you want to fix up, and you could get 10 to 15K more on the asking price, the economics make sense on that.
Yep. there's things that you do that, and it makes total sense. Sometimes paint and carpet just makes total sense to do, and you're going to sell for more. Us fixing the air conditioning line in the property is going to make total sense. It's going to bring extra value to the property. So just look at it. Look at properties like that. Try to find properties aren't a complete train wreck unless you are just picking it up for an absolute steal, and focus on the right type of properties and sell as quickly as possible. So you don't have big holding costs. Like our big holding costs right now, we use Kiavi and other asset-based lenders, even private lenders. But when you're talking about 10, 11, 12% on these rates, it eats you up pretty quick when you have an expensive property. You have a $200,000 property. It's going to be pretty expensive each month holding that, and you're losing profit each month that you do hold it. So keep that in mind.
Yeah. And I'll add one thing. When you're talking to the agents, you can tell pretty quickly if you're having a conversation with them that they are a capable agent and know what they're talking about and really know the market too. So kind of just have a conversation with them, see what they're seeing out there, and they'll get right into it. They'll be very thorough. They might want to talk your ear off, but you can tell they know what they're talking about. That's fine because they're thorough. And secondly, before you commit to doing a wholesale, make sure that agent has contact. Like this guy in Picola, we're not doing a wholesale there, but I mean, he's got contacts.
Yeah.
We had to get a plumber out there. He's got multiple people he deals with. He's lining all those people up for us. So I'm pretty much just saying, okay, makes it a hell of a lot easier for us too.
Sure does. It sure does. It's key. You get the right agent working for you, and they're doing a lot of the work for you and saving you a lot of time, money, and aggravation.
Yeah.
And when they know the market really well, it's just a huge plus. Then they're verifying your numbers, right? What you have on it, and you want them to do that. And or even tell you, like we've had it before. We had it once last year, Mike, with East Freedom. You and I had a way lower number than we thought we were going to get for that property. I think we had like 165, 185. I think we ended up selling like 220.
Yeah, something like that. Yeah.
But occasionally that happens too, because we're a little more conservative with our numbers. So especially in a shifting market, we're just going to be more conservative with the numbers, make sure everything looks good. Anything else to add, guys? I think we went through a ton of topics today. That is for sure.
Yeah, nothing.
Anything you've dealt with? I think that's aggravated with, Jake.
Sorry about that, Mike. What happened there? No, I think that's it. But yeah, the biggest thing is just make sure those agents are good ones that not only know the market but have contacts. Because if you're dealing with a situation like Cuero, Texas, you don't want to deal with it.
That's for sure.
It was the one that just kept on. There's something new every day.
Totally. And luckily there was a lot of meat on the bone for us there, and we still made money, which is good. And we knew we would. It was frustrating when we thought we could have made almost double what we were going to make on that property, right? We thought we were going to be in upper 40s and ends up being 29 and change when all was said and done. Yeah. And we're still waiting on a couple of bills to come in, but that's where I'm coming in with that number, like 29 and change. So hey, it's still good. I mean, most people listening will be happy with that, right?
Yeah.
We're complaining.
Yeah.
It's good problem.
Yeah.
But these, ones that we're picking up now is that we're really not doing anything to them, and we're turning around like Lake Charles. We turned around and sold it in like less than a week, to a cash buyer.
No, that was good. That was good. I see Rick just popped on here. No, that's good. That's we want those types where we're just getting them, relisting them, selling. A lot of them aren't even listed, right? A lot of them aren't listed on the MLS, these HUD CWCOTs. They're just listed on Zillow, if anything. So we're picking them up at what's hopefully a pretty good number, putting them on the MLS for find that nice arbitrage, putting it on the MLS and making a profit, making that little quick profit spread. And last year, when you first started working with us, Jake, you saw some of these nice profit spreads like Linton, Indiana, and a few others, Odessa. We got more. We're close on that Odessa. I imagine they're going to end up taking that one on that one Odessa property. So
yeah, I think next week we'll get it.
Yeah, I agree. Yeah. I totally agree. So we're looking pretty good with it here, and that's going to be our until we get towards the spring market where we know we could maybe do a little bit of fixing. And if rates drop a little bit and there's opportunity, we'll shift. But right now, this is our model, and I think we're going to stick to it as much as we can.
I'd rather stick to that model. It's less headache.
Yep. Work smarter, not harder.
Exactly.
That's the name of the game.
Yeah.
Wholesaling is great. Just relist and get rid of it. So, alrighty, guys. Well, thank you for jumping on there, and we'll catch you next month.
Good. See you, everyone.